Hello, good morning, perhaps good afternoon, depending on where y'all are joining us from today. Thank you so much for tuning in for our session. My name is Coral Owen. I'm the Professional Development Coordinator for the Military Families Learning Network. It's my pleasure to welcome you to today's session. Some of this information is hot off the presses. We'll be talking about 2021 tax updates today. In case you're joining us for the first time, I'd like to give you a brief tour of our webinar platform so you can find your way around. Hopefully you're currently able to view the slides we're sharing. If you can't see them or have any other technical difficulties throughout today's session, you can shoot us a tech support request via email to milfamln@gmail.com. I'll pop that email in the chat pod here in just a moment for your reference. As some of you have already done, we do look forward to having you join us in the chat pod for conversation and questions today. To embed the chat so you don't miss any links or conversations, simply place your cursor over the shared slides. You should then see a toolbar pop up across the bottom of your screen, and then from there you can select that chat bubble icon. When typing your comments and questions, please do be sure to select that all panelists and attendees response option from the drop-down menu right above where it says type message here. This ensures everyone who is on today's session can view those in the chat pod as they come through. We'll be covering evaluation and continuing education information at the end of today's session. Also note that you can download the slides that we'll be working through today, as well as additional resources on the event page, and we'll also place that link in the chat here momentarily. The Military Families Learning Network is part of a DoD-USDA partnership for military families, and our passion is to connect military family service providers and cooperative extension professionals to research and to each other through innovative online programming. It's now my pleasure to turn things over to my colleague, Molly Herndon. She's the program coordinator with the MFLN Personal Finance team, and she'll be introducing our two speakers today. Molly?
Thank you, Coral. We're pleased to have Andrew Zumwalt, an Associate Extension Professor and Campus-Based Specialist at Missouri University Extension, and Kelly Smith, Program Analyst, Military Community Support Programs Directorate within the Office of the Deputy Assistant Secretary of Defense for Military Community and Family Policy. We'll kick things off with Mr. Zumwalt, and thank you all for joining us.
Hello, everybody. Good to see you today. Hope it's beautiful where you are. It's a nice, getting to be a balmy 70 degrees here. We're going to talk about tax law today. We're going to jump back to the CARES Act a little bit, and then to the tax law that passed in December, late December. And then we've got some hot off the press tax changes that are not yet law, but are oh so close. They've passed the Senate. They've passed the House. They've got to jump around a little bit more to get everything finalized, but it's looking very much like it will become law. So let's jump right in. First, let's take a look at the CARES Act. There was the new charitable adjustment. So if you've donated at least $300 in cash, you can take that as an adjustment on your taxes. And so we've been telling people when we do taxes, for example, at our volunteer income tax assistance sites, you don't need to track your charitable contributions because you're not going to itemize because the standard deduction is so large. And so we've been telling folks, don't even track it. And it turns out that Congress kind of switched it up, and now you can deduct up to $300 in cash. And so going to have to change some of our language on that. Also, some changes to FSAs. So with that charitable adjustment, it is an adjustment on the front of your 1040. It has to be to a qualified charity, so you can't put it in your donor advised fund, and it has to be cash, so you can't give away non-cash things like clothes or furniture, etc. And it is a limit of $300 in 2020, but you'll see a little asterisk there because we'll see in 2021 it's a little bit different. They changed it late last year. Looking at FSAs, HSAs, and HRAs, still want to highlight this change. If you have an FSA, HSA, or some HRAs, the definition of qualified medical expenses has been expanded. So back in 2010-ish, they said that over-the-counter drugs weren't reimbursable from these plans. And in the CARES Act, they flipped it. They said, okay, now you can have these over-the-counter drugs being reimbursable. So acetaminophen, cough syrup. At the time that the CARES Act passed, I had a 1-year-old. That's right. And so she gets some rash a little bit. She gets some rashes. So we put a little butt paste on it, fix it right up. Also included, which is another big change, is menstrual products are now reimbursable. So the law specifically says things like tampons, pads, liners, sponges, or other products all of those things are now reimbursable from your FSA, HSA, HRA. I've done probably 24 of these presentations about the changes to the CARES Act. At one of the presentations, I had a mom find me over Zoom, and she said, "You just saved me a bunch of money. I've got 3 daughters. I really appreciate this information." And so, if maybe you've been purchasing some items and you maybe still have those receipts, or you can get those receipts from maybe a retailer like Walmart, you can actually look up your receipts online with them. Your window to claim those expenses for 2020 is probably closing quickly if it hasn't already. So if you have some of those expenses, look around and submit them to your FSA, HSA, or HRA administrator. So economic impact payments, this is pretty old news, but we'll make sure that everybody knows about it. $2,400 for married filing joint, $1,200 for every other filing status, and $500 per qualifying child using the child tax credit rules. This is the money you received hopefully in the spring. So this is the money you would have received in maybe April or May, or even June or later. And so this is that money that you received kind of early on, the big payment. And so who was eligible for this? Well, it was everybody, including people who were homeless or incarcerated. The IRS was actually pushing back on the incarcerated issue. They said people who were in prison weren't eligible for this. Some Congress folks got involved, and the IRS said, okay, there's nothing in the law that says that. And so the people who are or were incarcerated are eligible for this. Now, who wasn't eligible? Dependents. So if you had a dependent, let's say an adult dependent or a college-age dependent, they didn't get you any more money. And a dependent wasn't eligible either. Non-resident aliens. So if you were here, but you weren't filing a 1040, you were ineligible. And some high-income filers phased out. They were ineligible for the money. How was this all determined? Well, it was based on your 2019 taxes, right? Not everybody had filed their 2019 taxes, though, so they looked at your 2018 taxes. And if you didn't have that, well, they looked at Social Security, or were you receiving Social Security retirement, Social Security disability, or they looked at Supplemental Security Income, or SSI. And so some of those folks, they don't need to file a tax return because they don't have any taxable income. And so the IRS looked there, and then they looked at the veterans benefits. So if you didn't have a 2019 or 2018, they kind of went through this list of tax returns to look and see where to send the money. And we'll see how important this is later with the upcoming legislation that's currently being discussed. So these economic impact payments, there are no clawback provisions except for death before 2020. Sorry, I just saw a chat pop up a little bit here. And so let me make sure I'm kind of watching that as well. So no clawbacks. And so if you were, let's say your income was higher in 2020 and you actually would have phased out, you don't have to pay those back. Now, if you did, if you, let's say, had your spouse die in 2019, then if you had your spouse die in 2019, then you could have received a payment based on that spouse's 2019 tax return. And technically, you should probably pay that back. But if your spouse, let's say, died in 2020, then you don't have to pay that back. Got a question about what are clawback provisions? Clawback provisions are, let's say, when things get reconciled. So you received money in 2020, and all of this is getting reconciled on your 2020 tax return. There is no clawback. So if, let's say, looking at your full 2020 income, maybe you were going to get less of a credit. Well, there is no provision to pull the money back. So you got the money based on your 2019 income, but your 2020 was actually higher for whatever reason. You don't have to pay it back. Basically, if you got the money, you don't have to pay it back. And we'll see about that in just a second. Questions from YouTube Live. During 2020, you helped some people with their motel stay. Can I deduct these as part of my charitable contributions? No. You made a gift to that person. It's a very nice gift. Thank you. But that is not deductible. So looking at all these economic stimulus payments, they all get reconciled on your 2020 tax return. And I've got a little screenshot here of the recovery rebate credit, line 30. Notice it's called the recovery rebate credit. IRS calls these the economic impact payments, the stimulus payments, but it's technically the recovery rebate credit when it comes to the tax returns. And so all this gets reconciled there. And we'll look at the scenario here in just a second. Are the impact payments deducted from our tax return? Another question from chat. And they are not deducted from your tax return. No. So we'll see what we mean by that in just a second. Okay, so let's look at this scenario. We've got a non-custodial parent and a custodial parent. And so the divorce decree says that the child moves back and forth. And so the non-custodial parent claimed the child in 2019. Now, because the non-custodial parent filed their 2019 tax return quickly, they actually received an economic impact payment because the child was listed on their return. The custodial parent filed their 2019 and the child wasn't listed. And so they did not receive an economic impact payment based on their 2019 tax return for that child. However, when the custodial parent files their 2020 tax return, it all gets reconciled. And because that child is on the 2020 tax return, they're going to receive the recovery rebate credit based on that child. So what do we mean by clawbacks? Well, the non-custodial parent doesn't need to repay anything. The IRS looked at the 2019 and saw the child, gave them the money, and then the IRS will look at the 2020 tax return, see the child, and give the custodial parent the money. And so in an odd way, you're able to receive payment based on a child that isn't on your 2020 tax return. And we'll see again how this can play out in this upcoming legislation. So how does this all get reconciled? Remember, no clawbacks. When you file your tax return, you will enter in the amount of the first round of economic stimulus payments and the second round of economic stimulus payments. And so you should have received a notice 1444, likely in early spring, let's say midsummer. And you can see here it's coming from the White House. This is to my wife and I here, and our notice number 1444. And on it had Donald Trump's signature in very large ink here. But up here, this was the amount of your stimulus payment. And so you were supposed to keep this notice 1444, and that would inform you to how much to put on your tax return. You could also look at your bank statement to see how much was direct deposited or how much the amount was when you cashed your check. All that's possible. It's just this was your official notice. However, it never said to keep the letter. And so hopefully you did keep the letter, but if you didn't, if you know the number, that's fine. It's just important to know how much you received in the first round of economic stimulus payments. Addie's got a great question in chat. How does this apply to those who had a baby in early 2020? Well, you're going to receive that credit. Actually, 80, did you know the next slide? Look at that. A child born in 2020. If the child was born in 2020, it's going to show up on your 2020 tax return. And so you're going to receive a credit for that child who was born in 2020, right? You didn't receive it in 2020 because the IRS didn't know you had it. And so when you file your 2020 tax return, you'll receive the stimulus payments based on that child being on your tax return. And that's why the software asks you for how much you received, because it's checking to see if you were actually eligible for more. If you were eligible for less, again, no clawbacks, they're not going to take it away. All right. Another way to have a recovery rebate credit is maybe your income was higher in 2019. And so the IRS gave you a phased out amount. You got actually less than what you were supposed to. When you file your 2020 tax return and your income is lower, you'll get the remainder of your stimulus as that recovery rebate credit. Or let's say you got a new dependent that qualifies for the child tax credit. Maybe you took in your niece or your nephew and they meet all the rules for the child tax credit. All of that is going to give you a higher recovery rebate credit. Thank you, Addie. You asked that just at the right time. Okay, round two. So round two, this is the law that was passed late December after Christmas, before New Year's. And then most people received the money in 2021. I was actually at a tax training, and January 4th, it seems like everybody got their direct deposit. Everybody I talked to who did direct deposit got their money January 4th. And so that was $600 per primary and spouse. So $1,200 for a married filing joint. and then $600 per child, again, following the child tax credit rules. Now, I've had this discussion with so many people, in the tax sites when we're helping people file their tax returns in the volunteer income tax assistance sites. I received that payment in 2021, so that's going to get reconciled on my 2021 tax return, right? And that would be logical, but taxes are not logical necessarily. And so you received that second payment in 2021, but it's actually reconciled on your 2020 return. And so if you didn't receive that, then you're going to reconcile that on your 2020 tax return. So example, my father didn't actually get his second stimulus payment, so he'll receive it when he files his 2020 tax return. Round 2, we got a debit card and my son was mailed a check. What about receiving the round 2 as a debit card? If you received it as a debit card, you've still received it. And so I'm not exactly sure why they send out debit cards versus checks, but I know that they have sent some debit cards out. Some people got them in the mail, didn't know what they were, and threw them away. So they keep sending debit cards, but I'm not sure that people really like the debit cards. So the good thing about the second round of stimulus payments is that the IRS knew, hey, we can keep sending these out, or we can stop at some point, and then it'll be quicker for people just to claim it on their tax returns. So if you haven't gotten your second round stimulus payment by now, you're likely not going to get it except through your tax return. And so it might still be in the mail. The mail is kind of slow in some places, but it's likely that you'll get that money when you file your tax return. And this is what you see when you haven't received your second stimulus payment. It's a little unclear why people are getting these. Like I said, my father received this. I've seen it happen in a few other situations. And so the IRS, I think, was a little bit more cautious in the second round. And so they're kind of nudging people, a lot more people, to take the stimulus through their tax returns. And this is fun. More and more, I've been seeing second round stimulus letters come out on a 1444-B. And so they've been coming out very slowly. And so you may not have yours yet. That's fine. It's just like the 1444 in that it tells you how much you received, right? So it might be a slowdown in the mail, but they're slowly coming out. There is, unfortunately, also no lookup tool. So if you remember, I think it was during the Bush administration, we had the Making Work Pay Credit. And you can actually go online and look to see how much Making Work Pay Credit you had received. But there is no such tool. The IRS isn't making any tool that tells you the exact amount. You can see the payment status, which is one way of kind of figuring out if you received the payment or not. And you can also go out and use the IRS's account transcript tool. Only do that if you are really interested in maybe having maybe 2 to 3 free hours and being frustrated because the IRS account transcript tool isn't the easiest to use. And so you got to set up an IRS account. You got to verify your identity. It's not fun. And so it's better off maybe looking back through your bank statements and seeing how much you received in the second round of stimulus payments. Some other changes from late December is the carry forward of FSA balances. So a lot of people weren't spending their flexible spending accounts. So maybe their medical expenses were less than they expected. Maybe elective procedures had been deferred, that type of thing. Or the dependent care. A lot of people weren't going to daycare because maybe daycare was closed. And so the law changed to allow FSA balances to carry forward from 2020 to 2021, and then even from 2021 to 2022. However, Adele asked, is this going to be permanent? Is this, we're talking about the carry forward of balances? Is that what you're asking about, Adele? Yeah, no, this is not permanent. It's you can carry forward the balance from 2020 to 2021 and from 2021 to 2022. Yeah, Bummer is right. That's absolutely true. But the employers must opt in. With my employer, I have seen nothing that indicates that my employer has opted into this. And so I do have a bit of a medical FSA balance. I do wear glasses, so I'm looking at getting some nice looking shades with maybe my remaining FSA balance, because it doesn't look like that my employer is offering the chance to roll over or carry forward these balances. And so be on the lookout for that. And you might even want to lobby your employer if that's important to you. Another big change that came in December was you can actually use your prior year's earned income to calculate the earned income tax credit and the additional child tax credit. So what does that mean? Well, this is actually not new. The IRS has been doing this for several years with disaster victims. And so, for example, the California wildfires, you can use your prior year's earned income to calculate the earned income tax credit and the additional child tax credit. And so how does that work out? Well, you can use your 2019 if your 2020 earned income is less than your 2019 earned income. And so you can't reverse it. You can't use your 2019 if your 2020 is more than 2019, which would be maybe beneficial if you had a better year in 2020. You can only use it if 2020 is less than 2019. Have seen this actually a couple times. Had a grad student here at the university. They came in, they made $15,000 in 2019, and they only made $10,000 in 2020. Well, 15,000 is closer to the plateau for the earned income tax credit, the maximum you can receive. And it also helps to generate more additional child tax credit. So their income technically was 10,000, but we used the prior year income of 15,000 to generate a very large refund. It was almost, I believe, about $10,000. So we came close to doubling their income because we were able to use the prior year's earned income. Got a couple questions here in chat. Will asks, is the IRS account transcript tool the only way to find out the amount of the EIP second payment? It is the only official way. You can, that's under your control. Let me use that. You can wait for that notice 1444-B to show up in your mailbox. You could go out to your bank account and look up how much was deposited as well. That's definitely an option. But if you want to get official notice from the IRS whenever you want, then the account transcript tool is going to tell you. Kurt asks, must the 2020 income be less due to COVID or some other disaster? It's pretty much all inclusive. COVID is just a disaster. And so unlike other things like the retirement distributions where you had to be affected by COVID pretty specifically, this is pretty much just wide ranging. And so, yeah, you don't necessarily, I'm not sure exactly that you list it as a disaster on your tax form, but in the software, it'll ask you, here's your 2019 earned income. Would you like to use that instead? Okay. Always useful to kind of step back and look at the earned income tax credit graph as well. And so what we can see here is that the top line, so the kind of the darkest line, this is your earned income at the bottom here, the horizontal axis, and the vertical axis is your tax credit, the benefit. And so if you have 3 children and you make between the roughly $15,000 and $20,000 mark, you're going to get about $6,600, $6,660. If you have 2 kids, it's a little bit less, just a little bit less than 6,000. 1 child is $3,584, and if you have no children, it's a much smaller amount, only $500. In the tax law changes that are still pending but are very likely to go through, generally they've left the EITC for filers with children alone. So these 3 lines will look very similar for 2021. But the childless line down here at the bottom has been expanded and increased. So it covers a wider range of income, and it also is a little bit higher in terms of the tax credit amount. And so again, useful changes to the EITC, not so much for the people with children, but for the people who are childless. Have a little example here of why using prior income is so important. Let's say we have a single parent with 3 children. Their 2020 income was $5,000. So maybe they suffered some job loss, had their hours cut, that type of thing. And their 2019 income was $15,000. So if we look at the computations, if we just looked at the 2020 income, they'd be making roughly about a little over $2,500 in tax credits from the additional child tax credit and the earned income tax credit. But because the tax law allows us to go back to 2019, they're actually able to get the maximum, the $6,660, and then an additional child tax credit of $1,875. And so their 2020 income was $5,000, and they're receiving tax credits of, I think, over $8,000. And so being able to use prior year income when your current year is less than the prior year can be very beneficial at low income levels. Unemployment income is somewhat excluded from these calculations. And there is no requirement here. You just kind of run the calculation. So the tax software will ask you, what's your prior year earned income? You enter that, and generally the software will choose the better of the two. So very powerful. Okay, other tax changes. So what else happened at the end of December? Well, itemizing medical expenses became a little bit easier. And so instead of having the floor for itemizable medical expenses to be 10% or 7.5%, and for a while it was 10% for everybody except if you were 65 or older, and then it was 7.5%, and so it was just a pain to calculate. It is now permanently 7.5% of AGI. So that was a nice change to kind of improve quality of life improvement. Another quality of life improvement was the elimination of the tuition and fees deduction. And that starts for tax year 2021. So the last year will be tax year 2020 that we're filing right now. And so tuition and fees was kind of one of three ways that you could take an education benefit on your tax return directly. So the other two would be the American Opportunity Tax Credit and the Lifetime Learning Tax Credit, and then tuition and fees. It was such a pain to figure out, okay, which one of these three was best. American Opportunity usually one of all three. But if you didn't have American Opportunity, you could look at tuition and fees or lifetime learning. And so it was just another step. And it was so confusing, especially when you throw states in, because tuition and fees is a deduction, and it often lowers the amount that is taxable at the state. And so it wasn't just a simple federal calculation, it was federal and state. They eliminate it, thankfully, and to make up for the elimination of tuition and fees, they increase the phase out for lifetime learning to match American Opportunity. So now basically, if you have an undergrad, American Opportunity is going to be the best. And if you have a grad student, lifetime learning is usually the best. And so it's kind of simplified the possibilities of your tax benefits for your educational expenses. We talked earlier about that change to charitable contributions. Have to be cash contributions. You're able to deduct it as an adjustment instead of trying to do it as a itemizable expense. Everybody said, or many people said, hey, it's $300 for single people, right? So it should be $600 for married people. And that, again, that's logical. It makes a lot of sense, but that's not how the law was written for 2020. So they came back in December and they fixed it for 2021. It's if you're married filing joint, $600, and then $300 for everybody else. And so you can actually deduct a little bit more of your charitable contributions. Same rules apply. You've got to make cash contributions to a qualified charity. Also good to note, it's from AGI, but it's not an adjustment. So this, it's not an itemizable expense. It kind of exists in this space that the qualified business income deduction lives in. So you can't use this to lower your AGI, but it's not a truly itemizable expense. They've kind of squeezed it in on the tax form. Also good in December was the tuition assistance from employers to pay student loans. That was extended for several years. So if your employer has a tuition assistance program and you have student loan payments, you can tap that program if the employer allows it to pay your student loans. A tax-free benefit that is very worthwhile. All right. And here is kind of where I'd like to pause and see if you have any other questions. I've kind of been answering questions as I go. But if you have any questions about what we've talked about that is law, that is current, if you want to throw them out there in chat, now's a great time to do it, because the next couple slides, kind of the remaining time, we're going to jump into the tax plan that's on the table. And so I had it here listed as future predictions, but I've changed it because it looks like it is going to become law. So Jennifer asks, can you explain again where the charitable contribution goes so it's not taken from the AGI after it's calculated? That was very confusing. It is taken from AGI in 2021. In 2020, it is a calculation for AGI. So that's a great question, and it's very confusing, and I probably stumbled over that one a little bit. So again, 2020, it is a calculation for AGI. In 2021, it is a calculation from AGI, but it's not itemizable. It just kind of squeezes in there. Michael Ann asks, to be clear, the economic impact payments are not taxable. That is correct. The economic impact payments are not taxable. You will enter it into the tax software whenever you prepare your 1040, but that's just to calculate if you're eligible for more, how much more should you receive? Yes. Oh my goodness. So many people are asking about those payments. Does the U.S. mail forward stimulus payments for filers that have changed addresses? I've seen it go both ways on that. I've seen it be forwarded and I've seen it sent back to the IRS. If it is sent back to the IRS, it's actually going to be easier to claim that on your 2020 tax return for the first 2 rounds of stimulus. Michael, I believe that's the case. It is taxable, but they adjusted the calculation for the earned income tax credit for 2020. And we'll see, they've actually changed it up again. And so we'll talk about that in just a second. Unemployment is going to be a major hassle in the next couple weeks. It's good foreshadowing. All right. Any other questions? All right. Well, let's jump in because there's probably going to be some questions over this material. So, Jennifer asks, I received a grant from American Job Center to help with a required certification for my job. How does this impact my taxes, or is it part of the tuition and fees? We'd have to look into a little bit deeper about that grant. And so how is it structured? Is it kind of a scholarship, that type of thing? So we'd have to dig a little bit deeper on that. Question from YouTube, are there any new deductions allowed for teleworking? That's a great question. Easy answer is no. Unfortunately, there used to be, under the miscellaneous deductions for itemizable expenses, a place to deduct what are called unreimbursed business expenses. So, excuse me, if you, let's say you had a doctor who attended a lot of conferences and subscribed to a lot of journals and did all this personally, expended it all out of pocket, they used to be able to deduct that, and their expenses used to be quite large. And then the law removed that in the Tax Cuts and Jobs Act. And so the miscellaneous deductions related to your business are not deductible if you're basically someone else's employee. And so I know I've spent some money on equipment. I kind of upgraded my internet a little bit, all that not deductible. If you are your own small business, though, then those things would be deductible. And so it's useful to consider maybe starting up a small business in this time. If someone files electronically, will the software prompt them as to which year is best to use for EITC? It might. There's usually a question that says, hey, can you enter your prior year earned income? And it will likely allow you to skip that question. If your 2019 is more than your 2020, then you will it's a good idea to enter it just to see what would happen. Okay. All right, let's go ahead and keep moving. So the President Biden tax plan. Again, this is, actually, let me step back. I still have my crystal ball here. I used to have it on every slide and I deleted it because it's a lot more clear what's going to happen. But this is the government. It's not yet law. Things could happen at the last minute. I mean, Seems like a lot of things happen at the last minute. But in general, it seems like everyone has agreed that this is going to happen, that this is going to pass. It's survived a vote in the Senate. It's survived a vote in the House. And so it's likely that this will become law. So good news, there's an additional $1,400 additional in stimulus payments. And so there was a lot of talk about $2,000 payments. And so $600 of that came out in the second round. This is basically the third round, and this is why it's $1,400 to kind of make up the magical $2,000 number. Some of the changes is it does include dependents. So if you have an adult dependent, then you're going to receive the $1,400 based on that adult dependent, or maybe that dependent in college. This will not be resolved on your 2020 tax return. It will be resolved on your 2021 tax return as the 2021 recovery rebate. So, for example, if you have a child that's born in 2020, if you have a child that's born in 2021, then you'll receive this money when you file your 2021 taxes next year. And so it's going to operate similarly. I don't have the phase out for head of household right on hand, but it's somewhere between that single and married filing joint. This was a very recent change in the tax law. They upped the phase outs considerably. And so the phase outs start at $75,000 and $150,000 married filing joint. And they phase out completely at $80,000 and $160,000. And so what does this mean? Well, if you're looking at having your 2020 income be close to that $150,000, $160,000 line, but 2019 was actually below $150,000, it could be advantageous to let the IRS calculate the stimulus payments based on your 2019 tax return. And so if you delay filing the 2020, the IRS will look at 2019, maybe see a lower number, and again, calculate your stimulus payments based on the lower number. If you file your 2020, they're going to default to looking at the 2020, and that may actually give you a lower stimulus payment. Again, no clawback provisions on this, and so delaying filing could be advantageous depending on your situation. All right. Another extremely large change is that the child tax credit will be fully refundable. So right now, the child tax credit is $2,000. $1,400 of that is refundable, which means you can receive that $1,400 in your refund just like it was a payment. So if you've eliminated your tax liability with other tax credits, you can get up to $1,400 back in your refund. This change in the law would remove that and make it fully refundable. There would be no formula to figure that out. It would just be a fully refundable payment. It would increase the child tax credit to $3,600 for children less than age 6. And so that's a big increase from $2,000 to $3,600 for very young children. And then if you're 6 years or older and less than 18, you'd receive $3,000. And you can see I've got a little asterisk there on 18 because that's new, right? It's always been child tax credit is for under age 17. And so people would come into the tax sites to get their taxes done by the student volunteers, and their child would hit 17 and they'd say, why is my refund so low? Well, because your child hit age 17. For 2021, it's now going to be 18 is the line and no longer 17. These are temporary. These aren't permanent, but they are interesting changes. Now, these increases do phase out at pretty high income levels. So 150,000 married filing joint. They do phase out slowly and they don't phase out completely. So you just phase down to that $2,000. And then I believe the phase out for married filing joint for the 2,000 starts at 400,000 married filing joint. So these increases do phase out for higher income to individuals. With these increases in the child tax credit, the IRS is going to make available, believe starting in July and maybe continuing several times, payments of advance child tax credits. So actually giving you some of this money in 2021, and that will get reconciled on your 2021 tax return that you file in 2022. So there's going to be even more money kind of given through the tax system to folks throughout the year. It's kind of up to the Treasury Secretary on how this all plays out. You can opt out. You can say, no, I don't want these annual payments. And there's actually, I think in the law, a push for an online portal to be developed where you can go in and say, I don't want to receive these payments. I just want to receive it all on my tax return to pay my taxes in the calendar year 2022 when you file your 2020 tax return. I believe the phase out is based on AGI, but I would need to go back to the law and look at that. That's a good question. Let me write that one down. So as I mentioned before, the law reforms the earned income credit for childless workers. So it's going to be a higher credit now, I believe close to $1,500 at its max. And it's going to include more workers based on their age. And so I believe it's going to go down to around age 19. And before the limit was you had to be 25 or older. And then at the top end, you had to be younger than age 65. And the top end will be eliminated. So if you're older and you're still working, you might receive the earned income tax credit if you are childless. It still does exclude full-time students. So if you're a grad student and you're not being paid very much, because you're a full-time student, will exclude you from the earned income tax credit. Married filing separate is now eligible. So it used to be if you were married filing separate, you weren't eligible for the earned income tax credit, but you do have to have a child and live apart from your spouse the last 6 months of the year. This looks a lot like the rules for abandoned spouse and head of household. They've basically removed the requirement that you provide half the support for a home lived in by your child. So they've kind of made it a little bit easier for spouses who live apart to get the earned income tax credit. They've also written in law that if your 2021 income is lower than your 2019 income, then you can use 2019. So again, if 2019 is more beneficial to you, you can use your 2019 earned income to calculate your 2021 earned income tax credit. And the investment limit, which was around $3,000, $3,500, if you had more in terms of investment income with capital gains, interest dividends, if that was more than the investment limit, you were excluded from the EITC. They've raised that to $10,000, and that is a permanent raise that it will inflation adjust. One of the things they've kind of squeezed into the tax bill is for the next several years, there's no taxes on forgiven student debt. And so this was kind of a change. There was no forgiveness of student debt in this tax law, but there's going to be no taxes on forgiven student debt for the next several years. This kind of sets up maybe some executive action on forgiving student loan debt, and then folks who have debt forgiven not having to pay taxes on it like they normally would under certain circumstances. So no forgiveness on tax debt yet, or excuse me, no forgiveness on student loan debt yet, but it is setting up a play for the forgiveness of student loan debt. This is the real kicker here. This is incredibly frustrating. Unemployment, the first $10,200 of unemployment for 2020 isn't taxable. Now, notice I said 2020 and I highlighted it, put it in red because this is wild. It isn't clear how the IRS is going to make this happen. IRS tends not to comment on pending legislation, but you're basically going back into 2020 from March and saying, hey, we're going to rewrite the tax rules. If you go on Twitter and you search the hashtag tax Twitter, this has all the tax preparers just in a frenzy. Because what do? If you have folks who are coming in and you know that they've got unemployment income, do you wait? Do you not file their tax return? You just hold it on the side? Because what will happen is likely the IRS is talked in vague comments about pausing the filing season, because they're going to have to reprogram all the computers to account for this $10,200 of unemployment that isn't going to be taxable. Again, we're looking at unemployment you received in 2020. So maybe pausing the filing season. The IRS may decide to make automatic changes to everybody's tax return, but it's likely instead that they're going to force people to amend their tax return, perhaps. And thankfully, we can now e-file amendments. And so that's going to be a little bit easier. But that's going to be a lot of people maybe crowding out the tax preparation business when we're just starting to reach the peak as we get closer to April 15th. And then a lot of the states, they take their cues from the federal government. For example, I'm here in Missouri, and Missouri says, yeah, you start with federal AGI, and that's where you start to do your Missouri tax return. Well, if federal AGI is a lot less because of this $10,000, is Missouri going to honor that? Is Missouri going to say, no, we're counting on some of that income. You're going to have to put that $10,200 back and include it in your income for state taxation? There's a lot of uncertainty about how this is going to all shake out. And so we are likely to see mass confusion about what you're supposed to do. Because this year, interestingly enough, was also the year we had large increases in unemployment insurance. So that $600 that people received on top of the regular unemployment, that was a pretty big change. So we've seen unemployment of $10,000, $15,000. I think I've seen nearly $20,000. This is going to make a big change to people's tax returns. And they're going to be excited to have that change. But it's going to mean a huge reprogramming on the IRS side. One other large change that's going to require maybe some movement is the child and dependent care credit. It is now going to be refundable. Oh, I missed chat. I've got a couple of questions in chat here. Let me pause here and go back to chat. If your child turns 18 in 2021, you could get the $3,000 payment. No, if your child turns 18 in 2021, you don't get the payment. If your child turns 17, you get it, but not 18. So 18 is still out. 17 is now in. It wasn't in before. Who might consider opting out of advance payments? That's a great question. Let's say you're self-employed and you usually make quarterly estimated payments. It might be easier just to say, you know what, I don't want to take the payments. I'm going to let that refundable credit pay my self-employment taxes. It might be easier. If you receive stimulus payment under married filing joint and divorce in 2021, causing a single AGI higher than 80,000 in 2021, will it have to be paid back? There's no clawbacks on stimulus. So we have to dig a little bit deeper into that, but I would say no. What about full-time college students that work but do not get a stimulus check based that they're on their parents' taxes? Their stimulus payment will go to the parents. Comments about amended tax returns. Yeah, there's going to be a lot of amended returns. Do you think the IRS will push the filing date past the 15th? We'll talk about that in just a second. Student loan forgiveness in 2020 is taxable? I believe so, but I have to go back to the law and check to see if they are starting it in 2020 or 2021. I believe they started in 21, but Valerie, that's a good thing to check and see when the law passes. Okay, let's jump into dependent care. Child dependent care, it's refundable. So before it was not. Before it was a much smaller credit, non-refundable. It's now $8,000 of eligible expenses for one child and $16,000 of eligible expenses for two children. That's up from $3,000 and $6,000. So a huge increase in the credit. And it's a 50% tax credit for families who have less than $125,000 of income, phases out up to $400,000. Your maximum credit is $8,000 if you're paying $16,000 for childcare and you're in that 50% tax credit. That is a huge change. Alongside that, the flexible spending accounts for daycare, that's been expanded from $5,000 up to $10,500. If you look at this, the FSA and the child dependent care credit have always excluded each other. So if you had money taken out of your paycheck for the flexible spending account, you avoided taxes on that, but then you didn't get the credit. And now the credit is so much more useful than the FSA, right? If you're lower-ish income, excluding $5,000 or $10,500 of income may save you 10% or 12% or a little bit more, including the state taxes and the FICA taxes. But now the child dependent care credit gives you a 50% tax credit. And so the tax credit is a lot more attractive than the FSA. Employers may allow folks to change, but it may be very advantageous to push your employer to allow you to maybe decrease that FSA and receive more of the child dependent care credit. It's going to be dependent on your situation, But you might want to investigate that because that 50% tax credit is very attractive. And there's so much more in this. The 400% cliff for the premium tax credits in tax years 21 and 22 have been eliminated. The premium tax credit calculation is less smooth, so there's more jumps at the 299 and 300% of the federal poverty line. Another big change is if you had to pay back your premium tax credit in 20, it may not be required. So you may not have to make a big payment because your income was a lot higher than you expected. And so again, that's going to require reprogramming on the IRS end as well. If you receive unemployment in 2021 and you're also in the marketplace or your state exchange, you are going to get the maximum Affordable Care Act subsidy. That's also snuck in. That's a huge change. So a person who just receives a little bit of unemployment income, they get to exclude basically all their household income from the Affordable Care Act calculations. If you receive COBRA, there's going to be help to pay those premiums. So much more in this bill that I don't have enough time with everything today to talk about it. Many of these items are temporary. And so this excess advance payments, that's for 2021. The premium tax credits up here, 21, 22. Some of these things are permanent, like the change to the investment limits for the EITC. So many changes in this bill. So once you see it come out, there's going to be a lot of summaries. There's going to be actions to take based on when this passes. Have a great question about gift and estate tax exclusions. Nothing's been talked about in terms of estate and gift tax. So that could be coming up later. We don't know. So many items here. It's really important to take a look at this once it passes and we start seeing more summaries and strategies. Talking about the filing date, it seems like the CPA, the national group of CPAs, a lot of people are pushing for June 15th, not July 15th, because July 15th screws up a lot of state budgets that are looking at July 1 start dates, but they receive the income after that. That causes problems. So June would still provide the states to book the income in the prior fiscal year that ends June 30th. So June 15th would be agreeable by a lot of states. Everybody's pushing for this June 15th because it's just, they're going to have to pause the filing season to reprogram. Also a great question, is the IRS truly our social benefit administrator now? There might be some changes that need to happen if we're going to push so much social change and benefits through the IRS. There might be some strategies that we could look at to maybe make that smoother or easier. All right, I've got some questions and I got a little slide here for questions. I know we've got to move on to the next presenter. Any suggestions for websites for tax law summary for the average consumer? I think several extension websites usually have the summaries. And so I think probably Barb O'Neill is on here. She's got some pretty good summaries. There are a lot of the financial planning websites have great summaries. So if I was going to offer Michael Kitces' websites, Kitces, actually I can type that in. Michael Kitces, his website, and I don't have that website handy, but a lot of great information. Usually has the write-ups. A lot of your larger players, CCH, Walter Kluwer's, they will post summaries of the legislation, and it can be very helpful to kind of find those out. So, absolutely. Thank you. There we go. There's Kitts' website. I don't think he's got a summary yet because it's not law, but as soon as it is law, he will have a summary, and it's usually very good. So, all right. In the interest of time, I'm going to kick this over to the other presenter, and maybe if we have time for more questions at the end, we'll tackle them then.
Thank you, Andrew, so much. Hello, everybody. My name is Kelly Smith, and I am a clinical social worker. I serve as a program analyst for military community support programs. Our team provides oversight for 3 Department of Defense contracts, the first one being Military OneSource, secondly, the Military and Family Life Counseling Program, and then finally, the Spouse Education and Career Opportunities Program. Today, I am excited to speak with you about meal tax. It is one of the many services that are offered through Military OneSource. The Department of Defense really strives to provide support to our service members and their families on a continuum of support. And Military OneSource is just one of those avenues of support that is available to our military community. It provides information and resources and referrals on everything military life from cradle to grave for our service members and their family. But as I stated today, I'm really going to focus on meal tax. Meal tax is the only tax preparation and filing software provided by the Department of Defense that is designed exclusively for our military community. The software was developed specifically to address scenarios that are unique to our military, from combat pay to multiple moves. It's convenient, and we have trained experts that are readily available to support service members and their families. And I may not have mentioned it, but it is 100% free, regardless of the service member's rank or income. Our meal tax consultants are available to help users navigate the tax filing software and answer questions, particularly this tax season around the 2020 Social Security tax deferral and understanding the COVID-19 tax implications. If you have questions about taxes, questions that are specific to the military community, you can always call Military OneSource. That number is 1-800-342-9647 to speak with one of our tax consultants, or you can always schedule an appointment with them at any time. And those consultations, just like the e-filing software, is 100% free. You may be wondering, what are the credentials of our tax consultants? They are enrolled agents, certified public accountants, and attorneys, and many of them are retired from the military themselves, serve in the Guard or Reserve, and they return each tax season to provide support directly to the military community via the meal tax program. Additionally, the meal tax program works very closely with the Armed Forces Tax Council. That council consists of tax program coordinators for the Army, Air Force, Navy, Marine Corps, and the Coast Guard. The Armed Forces Tax Council oversees the operation of the military tax programs worldwide, and it also serves as a main conduit for outreach by the IRS to the military personnel and their families. So you may be, yes, I can add that number into the chat pod. And just for everyone's awareness, I will answer questions at the end, so please feel free to drop those into the chat pod. With regards to eligibility for meal tax services, and in general, if you're eligible for meal tax, you're going to be eligible for all the services that are available through Military OneSource. But for individuals that can access meal tax and the supportive services, that includes our active duty, Guard, and Reserve, regardless of their activation status, those service members and their immediate family members who are retired from the military or have separated, that's within 365 days post-separation. Additionally, students that are enrolled in one of the service academies for the Army, Navy, or Air Force are eligible for meal tax. Survivors and children of active duty, National Guard, and Reserve, regardless of their activation status. And then also immediate family members. So that includes spouses, children, anyone who has legal responsibility for an individual eligible service members' children during deployment or separation are able to take advantage of meal tax services. For more information about eligibility for Military OneSource or for meal tax services, you can always visit the Military OneSource website. Now, we get a lot of questions with regards to how to access the meal tax services. And as I stated, there are kind of two sides to meal tax services. There is the support that's offered through our tax consultants, and then there's also the free e-filing software. To contact or connect with our meal tax consultants, you can always just go through calling Military OneSource, or you can go to the website using the live chat function. It's always easier to me to just call to connect with a tax consultant. Accessing the software is a little bit different and not as simple as just picking up the phone to call. So in order to access the meal tax software, and I provided some screenshots here to kind of help navigate through that process, the service member or that dependent family member will have to create a Military OneSource account. The software provider that offers the tax filing service requires that the user log in through the Military OneSource account to determine eligibility in order to receive the free tax software product. An account with Military OneSource is completely free and will grant that user access to the free version of the tax software. If the user logs directly into that software provider's website without logging in through Military OneSource first, they may incur fees while filing. So that's very key. So when you access the MilTax software and get into the service provider site, you will see the H&R Block logo. We have users that will try to go directly to H&R Block thinking that they're accessing it through Military OneSource, and then they incur fees because they're not accessing the MilTax software product. A way to know that the user is in the MilTax software product is that they will see the MilTax logo at the top left-hand corner. We get lots of questions about that when folks are trying to initiate the process of filing. Our website has been designed and reconfigured this year to kind of help users troubleshoot that login process, ensuring that they log in through the Military OneSource website first. You will see here at the top right of this screen or to the right of the screen where it says ready to access MilTax software. You want to click the login to start the process. Now, before they get to the software product page, they will see another page that has them to review these MilTax reminders before using the software. And you can see that at the bottom of our PowerPoint slide here. We encourage the users to read those few reminders because it will answer some questions that they may have as they go into the login process. At the bottom of that page, they will be asked two questions. The first question is whether they are accessing the MilTax software from a VITA site. The reason for that is because, again, we work in partnership with the Armed Forces Tax Council. The services reps that are on that council want to know how many service members, how many family members are utilizing a MilTax kiosk or MilTax software product at a VITA location. So therefore, that information is shared with them, the numbers that are used at those VITA locations. Additionally, once they've completed that form, they just click the button to continue to the MilTax software, and they are then in the software. From that place, from getting into the software, they then will log in with their software provider credentials. So if they've used MilTax in previous years, they can just enter their username and information there. If they have forgotten their login information, they can call for technical assistance their direct number, and I can provide that in the chat. That number is 855-897-8639. Additionally, that information with regards to technical assistance for login is also on the handouts for this webinar to help users troubleshoot the login process. Additionally, through MilTax, outside of connecting with our tax consultants, outside of accessing the free e-filing software on the Military OneSource website, we have a VITA location finder. So that allows for users to go to the VITA finder, enter in their state, and it'll provide a listing of all of the VITA locations within that state, their hours, their contact information, a website, if necessary. Additionally, on the VITA locator page, that is regularly updated from the services. So this year, as you can imagine, many of the VITA sites are not functioning due to COVID, or they have reduced hours. You may also be aware that many of the VITA locations over the last, 2 to 3 years are moving away from having VITA sites. And so that really has been impacted this past year with COVID, but still that is an offering that's available at some locations. And we do like to ensure that our service members know what's available to them by utilizing the VITA locator on the Military OneSource website. And I can place that link down in the chat shortly. I missed a slide here. Going back to our frequently asked questions. So I thought it was important to kind of go through some of the questions that we are asked quite often about MilTax. And you will also see in the handout section for this webinar, our FAQs, and you'll see these answers there as well. The first question that we get often is, well, what exactly does 100% accuracy guarantee mean? Because we really push this, that the results that our users get is guaranteed, and our calculations are guaranteed to be 100% accurate, or the tax software provider will reimburse the user up to $10,000. There are terms and conditions that apply. In addition, the tax software provider is there to support the user if they get audited. Another question that we often get is, when and where will the tax software be available for our 2020 returns? We launched the tax software provider on January 19th. This year, we were not anticipating that returns would be accepted as late as they began being accepted back on February 12th, but nonetheless, users were still able to file early, and then they would be submitted through the IRS once they were able to begin accepting them. The software is available all the way through October 15th, 2021. And again, it can only be accessed through the Military OneSource website. Our tax consultants are available year-round. And again, I had the question, again, I realized duplicated regarding the 100% accuracy. Another question that we get often is, if someone is trying to file online through MilTax and they need help, where can they go? Again, our tax consultants, whether the filer is using our MilTax software or if they're filing on their own with another software provider, they can always call Military OneSource to speak with a tax consultant, or they can schedule an appointment at a later time with a tax consultant. Again, those consultations are completely free. If they have questions with regards to login issues, the software, the tax software, printing their returns, they can call the tax software provider using their 1-800 number and then follow the prompts. Lastly, another question that we receive is, well, when are our tax consultants available? As I stated, they are available year-round. However, they have certain hours or limited hours outside of the tax season. During tax season, they are available Sunday through Saturday from 7 a.m. to 11 p.m. Eastern Standard Time. And again, folks can call Military OneSource 24/7 to schedule their appointment with a tax consultant. And then their last question that we get most often is, well, what other tax and financial assistance does Military OneSource offer? So outside of our tax services, we have accredited financial counselors that are also available for an unlimited number of phone or video counseling support for service members to address their financial issues, whether that's money management or debt, as well as helping them to maximize the refund that they get during the tax season. Additionally, Military OneSource has tons of articles and information about taxes and resources on the Military OneSource website. And then if you also go to the Military OneSource MilTax landing page, there are all of our tax-specific information there that connects our service members with information from the IRS as well as from DFAS. I would be remiss if I didn't include information in this webinar about MilTax from Military OneSource. We do not only offer support around financial counseling and tax consultation, but also there is a huge range of services, whether you are working with someone that may need counseling support, need assistance with document translation if they need to work with a translator, language interpretation services, additionally support for our transitioning veterans, new military parents, wounded warrior and caregiver support, free health and wellness coaching. All of the services that are offered through Military OneSource are completely free for our service members and their families, essentially because these are benefits that they are entitled to. Additionally, with Military OneSource, if you don't want to call and speak with a consultant, you can always check out our website. Just like anything on the internet, it is available 24/7, 365. Additionally, on our website, there is a section that is dedicated to COVID-19 and providing information that is specific to our military community around COVID-19 and different stipulations. And then again, if you are needing to connect with a consultant and you're not in a space where you can call, the live chat feature is directly available from the Military OneSource website. Another feature that is not listed here on our website slide is our new Military OneSource app, which we are super excited to launch, that allows for our users, whether they have an iPhone and Android, to download our app and access all the information that's on our website directly to our app that is organized in a user-friendly manner. Again, Military OneSource is available on multiple different platforms, whether we're talking about Facebook, social media, Twitter, YouTube, and Pinterest, and then also on the Military OneSource website. I encourage you to check it out to get more information about the MilTax program, or to connect with a MilTax consultant. Okay, I think those are all the slides that have my contact information, but I am going to go back into our chat pod to see questions that have come up. And please feel free to add additional questions if you have any here. Okay, let me see. Let me make sure I'm going back here. I will add the number here for Military OneSource. It is 1-800-342-9647. Again, consultants are available 24/7, 365. I believe I did not send that to all attendees. Thank you. Go back up again.
Hi, Kelly. Thank you for sharing such great information. I'm seeing a question from Joshua. Is there any difference in eligibility between veterans and service-connected disabled veterans?
No, there is not. The key thing about understanding eligibility for our veterans is that it is services are available to those who are within 365 days of separation. So post 365 service members, those veterans and retirees are encouraged to utilize other tax filing services that are free of charge to them that are offered through the IRS or other entities. But it has to be within 365 days of separation. And thank you for prompting me with that question, because I'm trying to go through, there's tons on here.
Yeah, the list goes very quickly. And
Yes.
yeah, but thank you. And thank you, Andrew, for such a wonderful presentation too. It's lots of great information. I know I personally learned some new things. Let's see, Jennifer just posted a question. Is that regardless of separation type or separation reasoning?
I'm looking for that question because I'm not understanding what the question is. I apologize. Regardless of separation type, or they have to be honorably discharged. Dishonorable discharge are not eligible for Military OneSource services. Jennifer, does that answer your question? Yes, okay, perfect.
And then also, if anybody has questions for Andrew as well, you're welcome to put those in there. We still have about 10 minutes or so that we can take some questions. So that's a great opportunity.
Thank you, Mickey, for providing the VitaSite lookup. And thank you, Sarah, for providing the CGSUPRT site for Coast Guard that are not activated. Coast Guard are eligible for Military OneSource when they're activated with the Navy, but also Coast Guard members that are separating, regardless, are able to use Military OneSource. So there's a bit of eligibility difference for them. But thank you for sharing that resource, Sarah.
See, Coral is asking if there's a toll-free number for personnel who are stationed overseas.
Yes, I can put that in the chat as well.
So Barb is asking if you can talk a little about the new PIN numbers for federal tax returns.
Oh,
So-
absolutely. Oh, it's a great question. So this is good. When you file your tax return, how do you authenticate yourself with the IRS? Well, you do it in two ways. One, your social security number and your name have to match. And technically, your social security number and the first four letters or characters of your last name have to match. You can make a mistake in your fifth character of your last name, IRS will still accept it. They just check the first four letters of your last name against your number, and they take that. You also have to provide your AGI or the PIN that you signed your tax return with the prior year. And so that's, if you self-prepare, those are kind of the two ways the IRS authenticates you as being who you are. If you think about it, that's pretty weak. Social security numbers were assigned kind of based on where you live and based on when you were born. And they weren't very secure until more recently when they were randomized. And so that's not very good security. And thieves have been filing fake tax returns for years. And so the IRS came up with the Identity Protection Program. The IP PIN is what we call it. And you can now go out to the IRS and say, hey, I want you to send me every late December or early January a 6-digit number that I will use to file my return electronically. And that is a very powerful tool. And so basically you have something that a thief would have no idea about, and you cannot file electronically without that number. And so it's a very powerful tool to get one of these identity protection pins. Now, the downside to this is you have to have this pin in order to file your tax return. And I have seen a growing number of people lose their pin or move and not tell the IRS that they had moved. And so they didn't get their pin. And it can be a quite a big stumbling block, and which is what it's designed to do. And so it's better, but it's not yet great. And so if you are concerned about security, and we kind of all are, then it's a good idea to get one of these pins. Just know that if you lose it, it's hard to replace. Barb has a question. Is there a pin available for paper filers also? Yeah, if you, the IP pin, if you don't have it, you can't file electronically, so you have to file on paper. If you file on paper and your IP pin isn't on the paper return, the IRS will basically look at your return and spend more time verifying the information. So if you file without that PIN, it's also going to take a long time to have your tax return processed. So the IP PIN is great on security, but it does slow you down if you don't have it. Karen, and I apologize, but the Karen is asking, it used to be that you had to show you were a victim of identity theft in order to get a PIN. Has that changed? It has. So starting, I believe, in January or so of this year, anybody in the nation can get an identity protection PIN. It used to be it was only for the victims of identity theft. And then they expanded it to Georgia and Florida, anybody who lived there, because there's so much identity theft in those two states. And then the program expanded recently to the entire US starting this year. So anybody can get a PIN if they want to. From YouTube, will those pins only be provided through the mail? Absolutely, because how else do you get people information? No, that's a sarcasm. Yes, for right now, those pins are provided by via mail. We received the maximum credit amount from the American Opportunity Credit in 2020. My son received a 1099-Q from an ESA that we cashed out. The tax software wouldn't let us include it. Does he have to file taxes because of the 1099-Q? No, what should happen is you should reduce the qualified educational expenses by the 1099-Q amount, because you can't use any expenses that were paid by the ESA to calculate the tax credit. And so that's kind of the quick answer to that. It wouldn't necessarily go on the son's return, but it should be used to reduce any qualifying tuition fees, book supplies, and equipment that are being used to calculate the American Opportunity Credit. Did I miss one in here? Student loan filing, potential forgiveness changes. Yeah, so as we talked about, student loan, let's say you became disabled. your student loans were forgiven, that could cause a taxable event prior to this tax law change. After the tax law change, it's not going to be a taxable event. There's been no formal proposal to just have a mass forgiveness event, but this does set up the possibility, or it removes one of the potential roadblocks of providing a mass forgiveness event. Some people have talked about forgiving $50,000 of student loan debt per person, or $10,000 of student loan debt per person. And then another person pipes up and say, well, I paid off my student loans early. And, there's still a lot of discussion about what student loan forgiveness should look like. And I'm not plugged into that as deeply as others are. But they did remove one of the hurdles to that in terms of the taxation of the student loan forgiveness. All right. Did I miss any more? When it might go into effect? Well, I believe the House votes on it today. And then barring any other jumping around or other rules, it should go to Biden pretty quickly. And so we should see it signed into law. It's passed both the House and the Senate. And assuming that it doesn't get blocked anywhere, it should become law. Would you mind to touch on the mortgage interest deduction up to $10,000, since I see so many people refinance? You can deduct mortgage interest on your home that you use to purchase your home or build on your home. I'm not sure that there's a limit on mortgage interest necessarily. There is a 10,000 SALT cap. And I think those who live on maybe the East or West Coast and pay a lot in sales and local taxes, et cetera, they definitely know what that $10,000 cap is. And that's kind of what I've seen. I have not heard any discussion about removing the SALT cap either. I think it's there. People are interested in it, but I haven't seen anything in the law. IRS and bankruptcy code, is this tax liability? That's a little bit more than we can talk about. Can we get your contact information for later questions? Code was not mentioned. PIN is required to e-file. If the IRS has issued you an IP PIN, it is required to e-file. If you try and e-file without the PIN, it'll reject and say, hey, you need an IP PIN. Yeah, Joshua's got it. There were changes in the Senate, so it has to go back to the House. The House has already seen it, and the Democrats have a majority there. I think usually the House usually doesn't cause too many troubles. It's the Senate that gets a little rowdy sometimes. And so the fact that it passed the Senate is good. And so it could go back to the House. There could be some changes, but it's likely clear sailing. Can you still deduct interest on a line of credit used for a home remodel? That's a good question. I'm blanking on that one right now. I know that they've changed that. I'd have to dig a little bit deeper in that. I know you can use it to purchase. If you take a home equity line of credit out to purchase the home, that's fine. But a remodel, I'm not sure on that. Barb or anybody who knows that one can jump in on that one. All right. At this moment in time, I'm going to defer on sharing my contact information because there is just kind of so much going on. I do support VITA sites across the state, and this is kind of my busiest season. I was actually out all day yesterday driving around Southwest Missouri. And so if you are needing an answer to your tax question, you might be better served finding maybe your local tax professional or someone else knowledgeable about taxes, because I will be honest, my email just blows up around this time of the year, and I sometimes struggle to keep up with it. Or yeah, Kelly says call Military One Source. I think there's folks 24/7,
Yes.
right? 365.
Yes. Call one of our meal tax consultants.
Yeah, it's I feel bad because then I feel bad because I'm not replying to people, and it's a cycle of unhappiness.
You'd be inundated. Jennifer, if you have a question, you can absolutely still call. Our consultants are not going to turn you away.
All right, if that's all the questions, I think we will go on to our next slide. We hope that you will join us for our April 6th webinar, Federal Student Aid. It will cover public service loan forgiveness, as well as some other federal student aid issues related to forbearance and other COVID concerns. And if we'll go on to the next slide, please. This webinar is approved for 1.5 CEs for AFCs, CPFCs, and the Center for Financial Certifications, and CFLEs through NCFR. If you complete the evaluation, which is located on the purple button on the event page, it will direct you to a post-test at the end. Please select the correct link for your accreditation and complete that information. You'll receive your certificate of completion by email. If you have any questions about that process, please email me at mollyh2@extension.org. I'll be happy to help. Thank you, Coral. And thank you to our presenters. Appreciate the conversation and the chat questions as well. This was a wonderful topic. And we invite everyone to subscribe to our monthly newsletter. You can find that on our page at Military Families Learning Network/personal finance.
Great. Thanks, Molly. And thank you again, Andrew and Kelly, for your time and expertise today, as well as to everyone who provided questions. Just as a quick reminder, all of the resources that were covered in today's webinar, including the slides that we worked through, are available on the event page. And additionally, we are going to be posting the recording of this webinar in case you need to go back and review any information, or you would like to share this out with any colleagues who may have missed today's live session. Thanks again for tuning in. We do hope to see you for our continued conversation of our Military Family Readiness Academy, which continues tomorrow. We'll be hosting sessions on disaster and hazard readiness in action from now through the end of March. So thanks again for tuning in. We hope to see you again soon, and take care and have a great rest of your day. So all of the continuing education opportunities that are available for today's session, including a certificate of completion, are all linked through that purple continuing education button on the session page for today. So Henry, if you have any other questions for your specific scenario or circumstance, anything that's unclear, please send Molly an email and she'll absolutely be able to assist you. If you're having trouble with the continue education button, please try refreshing your screen. And for any other follow-up inquiries, please send us an email so we can troubleshoot after we close out the room here in just a moment. So, all right, we're going to go ahead and close out the room for today. Thanks again for tuning in.